Hello, this is the ActivTrades Weekly Outlook. Every Monday we look at the economic calendar and identify the key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the Royal Bank of New Zealand policy statement, US GDP numbers for Q1, and EU consumer confidence and business climate surveys. We'll start our weekly preview by looking at the New Zealand Central Bank monetary policy statement, which will be released on Wednesday. The Kiwi dollar has been under pressure over the last few months with a lackluster performance that left many analysts scratching their heads, trying to figure out the reasons behind the currency's weakness. New Zealand's data has been strong recently, and the medium-term outlook for the US dollar is bearish. However, the Kiwi has so far this year struggled to rise above the 0.73 level. But this may be about to change. Several countries in the Asia-Pacific region recently imposed fresh lockdowns, which could end up weakening their currencies, a scenario that may trigger support for the Kiwi dollar. As the region's currencies struggle, the trade-weighted Kiwi may finally break through the 0.73 level and aim for the next resistance at 0.76. So it will be interesting to learn more about the central bank's views this Wednesday, as the prospect of tighter monetary policies could drive even more gains for the New Zealand dollar. Moving on to North America, the greenback's performance over the last few weeks has been characterized by rebounds and dips, as a succession of data keeps providing fuel to both sides of the inflation argument. The latest chapter occurred on Friday, with US manufacturing PMI data surprising to the upside and feeding inflationary fears, with the dollar rising immediately and cancelling the losses of the previous session. The publication of US GDP figures on Thursday is likely to be another such moment. The current expectation is for a rise of 6.5% in relation to the previous reading. Such level of growth is already baked into the expectations of investors. So, unless the numbers come up higher than the consensus, there will be minimal impact on the dollar. On the other hand, should the figures disappoint, the greenback could end up under pressure, as it would strengthen the case for those who see the economic recovery as still being incipient and needing plenty of nurturing, vindicating the Fed's current dovish stance. The central bank maintains its view that any inflationary pressures are temporary, asserting the importance of maintaining the current stimulus in place until a more advanced stage in the economic recovery is reached. So, GDP data, depending on how it comes up, may provide more arguments to one side or the other, and therefore could also impact the performance of the dollar. Moving on to Friday. The European Commission will release data related to the region's consumer confidence in economic activity. A high level of consumer confidence stimulates economic expansion, while low levels point to a downturn. So, a high reading here will be seen as positive for the euro. As we saw last Friday, following the publication of Eurozone PMI data, which came up above expectations, the European recovery is gathering pace. So, few will be surprised if consumer confidence ends up beating expectations, with the euro likely to find more support in such scenario. The single currency came under some pressure on Friday, as the ECB President, Christine Lagarde, insisted that the rise in the region's inflation is only temporary, hinting at a continuation of the current accommodative stance for the foreseeable future. However, data is data, and traders will be likely to beat the euro if the numbers show that consumer confidence continues to rise. This is all for today. I will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.